Are you looking to purchase a home and not sure which loan program you should do? I recently did a video about FHA home loans, and today I thought I would talk about conventional loans, what's the difference, and more importantly, which loan program is better for you. I'm Jamie Mushaw with Jamie Mushaw Real Estate, and if you're new to our channel, we talk about all things real estate here in Southwest Washington, including Vancouver, Camas, Battleground, surrounding areas, and also the Portland, Oregon metro area. In this video, I'll break down exactly what a conventional loan is, who it benefits, and how it compares to an FHA loan and which loan program is potentially better for you. What is a conventional loan? A conventional loan is a loan that is not backed by the government like FHA is. Usually when you're looking to get a conventional loan, it's through a private lender, and the guidelines for a conventional loan are typically set by or followed by Fannie Mae or Freddie Mac. Because there's no government backing behind conventional loans, that means that there are going to be some stricter guidelines. You're going to need to have a higher credit score, and usually you're going to have a higher down payment. But also with what comes with that is some major advantages that may make it a smarter option for well-qualified buyers. So let's do a little bit of a comparison between FHA and conventional loans. So here are some of the features that we look at when you're comparing the two loans. The first is going to be what a minimum credit score is. With FHA, you have to have a minimum of a 580 credit score, but you could also have a 500 credit score, which would require you to have a 10% down payment. With conventional loan, typically you need to have somewhere between a 620 to 640 and above in order to get a conventional loan. Your down payment with an FHA loan is going to be 3.5% down. With conventional, it can be as low as 3%, but usually it's going to be somewhere between 5 to 20%. With another feature that we're going to be looking at is mortgage insurance. Mortgage insurance is required for the life of the loan when you have an FHA loan. With conventional loan, you can remove mortgage insurance after you have 20% equity in your house, whether that is through over time of equity building with the value going up, or if you're paying down the principal to where then you have 20% down, 20% equity in the house. For the purchasing of what type of property can you purchase with an FHA versus a conventional loan? With FHA, you can only purchase your primary residence. With conventional, you can purchase a primary residence, a second home, or an investment property. Now, flexibility of terms. There are more lenient guidelines when you're trying to get an FHA loan. Obviously, with the lower down payment and your credit score, that's one option. But with conventional loans, you have stricter guidelines, but typically you will get more competitive terms in regards to what like interest rates. And the loan limits for FHA versus conventional. FHA is typically a lower loan limit. So there's only a maximum amount of property that you can purchase with an FHA loan. With a conventional loan, you have a substantially higher loan limit that you can get, which opens up your options to the type of homes that are out there available to purchase. So key takeaway, FHA loans are great for people that might have a lower credit score and have a lower down payment, to where conventional is beneficial to those that have stronger financial profiles, that have more flexibility, and will typically have lower long-term costs over the life of the loan. So what are some of the biggest benefits to having a conventional loan? Well, the first one is that if you put 20% down, that automatically eliminates the monthly PMI, or also known as private mortgage insurance, from your monthly payment, and that can save you hundreds of dollars per month. Secondly, that even if you don't put 20% down, that private mortgage insurance can be removed as soon as you have 20% down equity in the home. That, unlike FHA, where that's going to carry through the life of the loan. With a conventional loan, it allows you to be able to purchase that second home, or if you want to have an investment property. These are things that you can do with conventional loans and not with an FHA loan. So a conventional loan is great, and it allows you more flexibility and having more purchasing power when you're going to buy a property. Additionally, if you're doing a conventional loan, if you're in a market that is a hot market, typically a seller is going to consider a conventional loan over an FHA loan for several reasons, because again, usually a conventional buyer is a stronger financial purchaser versus an FHA buyer. So if you're in a market where you have multiple offers, that might be a scenario where you're like, you want to do a conventional loan because you have a upper hand when you're making offers on properties, to where you're showing these sellers that you are able to purchase this home. Usually, again, you're going to have a higher down payment. So in general, a conventional loan is going to benefit you in a hot market. Another benefit to having a conventional loan is that if you have a high credit score and low income to debt ratio, that typically means that you're probably going to get a lower interest rate for your mortgage than you will when you go to get an FHA loan. Another major benefit if you're doing a conventional loan is that there's no upfront mortgage insurance premium like there is with an FHA loan. So you're automatically saving costs out of your pocket that are not going to be included in your closing costs, which could typically be a couple $1,000s to have to pay that upfront mortgage insurance premium. Again, conventional loans are great for buyers that have above a 620 credit score, have a high down payment, low debt, are looking to possibly purchase a move-up home, a vacation property, or an investment property. And it's just all around a better loan for somebody that is more financially stable, because you're going to typically get that more of a competitive interest rate on your mortgage. To wrap up, FHA and conventional loans offer great paths to home ownership. It just really depends on your personal situation. If you have a great financial background and some money saved up, then a conventional loan is going to be the way for you to go. And if you're still building your financial profile, then you might want to consider an FHA loan. If you have questions about either one of these programs, feel free to drop the questions down in the comments below and I will answer them for you, or you can just send me a message. Additionally, we have a link to our free weekly newsletter that you can sign up for with some more great information about the market. Also, if you can like and subscribe, we have some great videos coming out for you in the future, and we don't want you to miss out on those either. I'm Jamie Mushaw with Jamie Mushaw Real Estate, and thank you for watching our video today.